Support and resistance trading strategy. Hey guys, welcome back to another episode. In this video we will be going through our very simple yet profitable scalping, intraday, and swing trading strategy that no one ever told you. This video provides a clear, winning, step-by-step guide to how to successfully trade the markets and generate consistent profits. So, by the time you finish this video, you'll know exactly how to find high-probability support and resistance levels, and when to enter high-probability trade based on the support and resistance levels. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. So, what is support and resistance? Support and resistance is one of the most widely used concepts in trading. All traders on Wall Street and any stock exchange worldwide pay attention to support and resistance areas. Therefore, it cannot be avoided that support and resistance are extremely useful for all traders, whether they are professional traders or beginners, and you must thoroughly understand how to determine the right support and resistance area. It has been proven that the support and resistance I will teach in this video is highly powerful and effective in increasing the accuracy of your trading, just like how traders on Wall Street use it. Therefore, there is no other choice but for you to master it well. Let's take a look at the basics first. Look at this diagram. As you can see, this zigzag pattern is making its way up a bull market. When the price moves up and then pulls back, the highest point reached before it pulled back is now resistance. Resistance levels indicate where there will be a surplus of sellers. When the price continues up again, the lowest point reached before it started back is now support. Support levels indicate where there will be a surplus of buyers. In this way, resistance and support are continually formed as the price moves up and down over time. In the most basic way, this is how support and resistance are normally traded. Trade the bounce. First, buy when the price falls towards support. Second, sell when the price rises towards resistance. Trade the break. First, buy when the price breaks up through resistance. Second, sell when the price breaks down through support. A bounce and break? Say what? If you're a little bit confused, no need to worry, as we will cover these concepts in more detail later. Plotting support and resistance levels. One thing to remember is that support and resistance levels are not exact numbers. Oftentimes you will see a support or resistance level that appears broken, but soon after find out that the market was just testing it. With candlestick charts, these tests of support and resistance are usually represented by the candlestick shadows. Notice how the shadows of the candles tested the 1.5360 support level. At those times it seemed like the price was breaking support. In hindsight, we can see that the price was merely testing that level. So how do we truly know if support and resistance were broken? There is no definite answer to this question. Some argue that a support or resistance level is broken if the price can actually close past that level. However, you will find that this is not always the case. Let's take our same example from above and see what happened when the price actually closed past the 1.5360 support level. In this case, the price had closed below the 1.5360 support level, but ended up rising back up above it. If you had believed that this was a real breakout and sold this pair, you would have been seriously hurt. Looking at the chart now, you can visually see and come to the conclusion that the support was not actually broken. Support was breached, but only temporarily. To help you filter out these false breakouts, you should think of support and resistance more as zones rather than concrete numbers. One way to help you find these zones is to plot support and resistance on a line chart rather than a candlestick chart. The reason is that line charts only show you the closing price, while candlesticks add extreme highs and lows to the picture. These highs and lows can be misleading because oftentimes they are just a knee-jerk reactions of the market. It's like when someone is doing something really strange, but when asked about it, he or she simply replies, "Sorry, it's just a reflex."
I'm sorry, Mom. It was a reflex.
When plotting support and resistance, you don't want the reflexes of the market. You only want to plot its intentional movements. Looking at the line chart, you want to plot your support and resistance lines around areas where you can see the price forming several peaks or valleys. Other interesting tidbits about support and resistance. When the price passes through resistance, that resistance could potentially become support. The more often price tests a level of resistance or support without breaking it, the stronger the area of resistance or support is. When a support or resistance level breaks, the strength of the follow-through move depends on how strongly the broken support or resistance had been holding. With a little practice, you'll be able to spot potential forex support and resistance areas easily. Every trader on Wall Street and any stock exchange worldwide pays attention to support and resistance areas. Therefore, it's evident that the auto support and resistance indicator is highly useful for all traders, both professional and novice. By using this indicator, you won't struggle anymore to find the best market to enter on any given day. With the help of the auto support and resistance indicator, this task becomes remarkably easy and fast, even if you have to analyze hundreds or even thousands of stocks every day. It has been proven that this tool is incredibly powerful and effective in improving the accuracy of your trading. This should be simple enough. Or, in this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. A support and resistance trading strategy that lets you profit from losing traders. Here's a fact. Support and resistance attract a lot of attention from traders. There will be some looking to trade the reversal and others looking to trade the breakout. Since trading is a zero-sum game, for reversal traders to profit, breakout traders must lose. And for breakout traders to profit, reversal traders must lose. Now, let's learn a support and resistance trading strategy to profit from breakout traders. Here's what you need to do. First, mark your areas of support and resistance. Second, wait for a directional move into support and resistance. Third, wait for price rejection at support and resistance. Fourth, enter on the next candle with stop loss beyond the swing high or low. Fifth, take profits at the swing high or low. Here are another examples of the most profitable support and resistance trading strategy that you need to know in order to fully understand this remarkable strategy and make the most of it. Every trader on Wall Street and any stock exchange worldwide pays attention to support and resistance areas. As illustrated in the previous example, I always choose markets where the support and resistance areas are clearly formed for me to trade. With the help of the auto support and resistance indicator, this task becomes remarkably easy and fast, even if you have to analyze hundreds or even thousands of stocks every day. You must understand this trading strategy isn't the holy grail. There are times you'll lose to breakout traders and at times, breakout traders will lose to you. The only way you will survive in the long run is through proper risk management. Thus, I suggest risking not more than 1% of your account on each trade. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell and leave us a like to show your support. See you next time.